Money on my mind, 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 money on my mind. So money is all I think of. Money on my mind, money on my mind, money on my mind, money on my mind.
All right, ladies and gentlemen, we are back for another episode, the first episode of 2024. Financial State of Minds, the show where I help you get to that bag, manage that bag, and grow that bag as best as possible by teaching financial literacy and business literacy as well. You're joined here by your favorite blindy, boogity blindy himself, Darrin Harvey. And we're back here in Oakland. We're back here for episode 37. Just want to thank everybody who continues to watch the show on KGPC 96.9.org, or God, I'm forgetting already, or Spotify, or iHeartRadio, or your favorite casting platform of choice. I'm rusty, as you can tell, but it's all good. It's all good in the hood, even though I'm not from the hood, even though we're in the hood. But yeah, we're here for episode 37. Glad to be back in 2024. Want to continue to thank the staff at KGPC for making me sound amazing. Mainly, the staff is one person. Let's keep it real. Thank you. And yeah, we're just going to get right into it. Today, we are talking about everyone's favorite topic of finances. How to rob a bank is what I would do if I was trying to go to jail. No, I'm not teaching you guys that. Never. I'm teaching you guys today about taxes. Yes, tax season is coming soon. It is for all you ladies and gentlemen who love to give Uncle Sam your hard-earned money. I know you guys love it. I know you guys love to give up that 22%, that 24%. If you're a high earner, you're giving them 37% just to the feds themselves. I know you guys love to do that and you want to give more. So I'm going to teach you how to give them more money. No, I'm not. I'm just going to teach you how it all works. So that's the purpose of this episode. I just want to teach everybody who's listening and everyone who's watching how the tax system works. This is not an episode about tax advice. I am not a tax preparer. I am not a CPA. I'm not an accountant. I'm just some guy who doesn't have a lot of vision but knows about how the tax system works. And I feel this is important because a lot of people feel a ways about how our government sets up our taxes, how a lot of countries set up taxes. Every country, every county, every state, every city, for the most part, has a tax system. It doesn't matter how conservative, how literal the politics, where they land. Everybody, as far as I know, has it. People need to understand it. As they say, this is not taught in school, and this is why I do this podcast, is because this stuff is not taught in school for a reason. I'm not going to talk about it because I'm not trying to get snatched up by the government, but it's all cool. We're talking about taxes, and let's just get right into it. So for the 1.5 person who doesn't know what taxes are, what is taxes? So taxes, simply put, is any mandatory extra payment that you have to give on anything. It could be a goods, it could be where you live, that goes to the city, that goes to the state, and or the federal government when it comes to the United States of America. That's what a tax is. You got to pay it. If you dodge it, it's called tax evasion. And yes, you can not only be fined, but you can go to jail for not paying taxes. We all know that. So I'm not going to spend time on that. Why does a country tax us citizens? Why do they tax you walking right there? Why do they tax you? Because they want your money. Why do they want your money when they can print their own money? Because they can. It's really that simple. No, it's because they need your money to pay for the country. They need their money to pay for the country as a whole, United States of America. They need the money to pay for the county you live in. I live in Alameda County. They need the money to pay for the city you live in, wherever they need it. So what are they paying for? Well, we know this, right? They're paying for the schools you're sending your kids to or you're going to currently. They're paying for Social Security. They're paying for our military. They're paying for our terrible infrastructure that 880 continues to be. Yes, government, please upgrade that road. Please, it's ridiculous. I don't even drive and it's ridiculous. But all that aside, yeah, infrastructure, that includes our buildings, so much more. But that is the reason why the government needs your tax dollars, because other than that, we would not all pay for this stuff on our own free will. Let's just be honest, because no one likes paying taxes. So that is the importance on why we pay our taxes. So how does the actual tax system set up? Like, how does it work on a grand level? So, okay, we get it. We know what it's for. You have to pay this. We know who it goes to. But, like, we know they're paying for stuff. But, okay, like, a common question is, like, why is it set up this way? Particularly where us individuals, us everyday people, compared to businesses, get taxed seemingly more, quote unquote, than a business. I want you guys to think about this scenario. So you're a city mayor, you're a governor, you're a president, and you need your money, or you're trying to get this money, you're trying to collect these taxes. Well, ultimately, it comes down to you want the best residents who have the highest income, right? So that means you're going to want businesses to be there. Why do you want businesses to be in your city? Because, well, people are going to, go to your city to work so they can earn money to end up paying the city. All right, well, okay, great. So what are we going to do to encourage these businesses to, do business in your city, to do business in your county, in your state? We're going to give them the tax advantages. Another reason, why do people live in the city? Well, because it's safe. There's work there. Their school districts are great, have a great reputation. So that's another reason why people are going to want to live in a certain city. And what do? They stay in that city. So if you live in a nice city, say Palo Alto, nice school system, maybe has one of the best high schools, something called Gunn or whatever. We're going to give the tax advantages to the people who own the property that you live in compared to the person who's working, because there's less of those people. Same thing with business. And you just keep going up. This is why basically quote unquote rich people, or just people who own assets, have more tax advantages compared to people who do not, because the government is trying to find ways to have everyday people like you and me live in their city. So I know it sucks, but it makes sense. So just think about it. That's just a little small sample of why it's set up this way. I can go super in detail, but I'm not trying to bore people, because ultimately this is an episode about taxes. How fun is that? So we know what it is. We know how it's set up. We know why it's set up. So what kind of taxes are there? So I'm going to break it down into two subsets right now. So I'm going to do everyday people, aka individual taxes, and the business people taxes. By the way, this episode, we're focusing mainly on the everyday person. I'm really not going to go too much into depth into business taxes. It's a whole separate beast. I may or may not make a part 2 episode on that, but everyday people taxes, that's what we're talking about. So everybody, doesn't matter if you're Mark Zuckerberg, it doesn't matter if you're Darrin Harvey. We all get income taxes. We all get sales taxes. And if we own property, or if you're even renting in a way, you have property taxes. Those are the 3 major categories. Now, each one of them has their own quote unquote definition. So I'll just break it down quickly for you guys listening. Income tax, what is that? It's literally what it sounds like. If you make money in any way, in all ways, you must pay the government taxes on income taxes. You pay the federal government income taxes, and if you live in a state that has income tax, you pay income tax. So for everybody who's listening in California, you guys all know this, you're paying income taxes. But if you were to live in the great state of Texas, which most Californians move to, they don't pay income taxes. And obviously you can save money that way. So let's break down the actual ways of income that you may be getting taxed. Everyone who's probably listening has a W-2 job, including myself now. So you're getting taxed there. You're getting taxed on any type of residual income you may earn from working. So if you're making music, or you are an independent movie creator or whatever, and you post it on YouTube and you get 1 million views and YouTube cuts you a check for that one video for, I don't know, $1,000 or something like that, you're going to get taxed on that. Even if it's every single month that video continues to get viewed, YouTube continues to send you that 1,000, you're getting taxed on that. That's residual income. I call it semi-passive income. You're still getting taxed on that. And then you're getting income taxed on investments. Yes, guys, you get taxed on your investments too under certain conditions. So what are investments? Investments, as we know, is real estate, it's stocks, it's bonds, it's treasuries, it's resources like gold and stuff like that. You're going to get taxed that way. However, you're never taxed for holding, so let's say, a stocks. So if you have $100,000 in stocks in a stock portfolio, you're not getting taxed for having that $100. You will, however, get taxed once you either, one, sell a piece of that stock for yourself and then you liquidate it, aka that money gets transferred to your bank account, or two, those stocks send you dividends. Even if that money is still in your dividends portfolio, you're still taxed because it's liquid cash. The most common way you guys are getting taxed with your investments, that all of you guys are probably getting taxed and you may or may not be aware of it, is having a savings account with any amount of interest. So if you have a savings account right now with whoever bank and they're giving you, say, a 4.5%, which is what I'm getting right now, you will be taxed on those earnings. You get a tax form that you have to fill out. I'm sure you guys have seen this. So this is all basic stuff. But the point is, yes, even if you have investments of any type, you do get taxed on it because at the end of the day, that is income. And also, lastly, Social Security taxes and Medicare taxes are technically separate, but of course come from your income. And that's federally. In California, we also pay SSDI as well as a state. As someone who lives in the state of California, you pay that too. So that's all income taxes. Sales taxes, we know what that is, but I'll just go over it. It's basically when you're taxed on buying a service or a good. So yes, you're getting taxed when you go to McDonald's. Yes, you're getting taxed when you buy them Nikes that you shouldn't be buying because you probably can't afford it. I bought them too, don't worry. But any service goods, subscriptions gets a little fuzzy, but usually sales tax are included in subscriptions. That's why you don't kind of see it. That's why it's just like $9.99 or $7.99. But yes, your sales tax is there. If you don't want to deal with sales tax, move to Oregon. Yes, I'm looking at you. Move to Oregon if you don't want to deal with sales tax, or any other state that doesn't have sales tax, because not all states have sales tax and not all states have income tax. The last thing is property tax. I'm not aware of any state that doesn't do property taxes. That may or may not be run. Go find out on Google if you want to find out for sure. But if you are a homeowner, like I am, like I'm lucky to be, we give up a small percentage of whatever the property is worth to the government for property taxes. This is true for your house. This is true if you own a business and there's a brick and mortar and you're in an office and you own that building, you're paying that property tax. And don't worry, if you rent, which a lot of you guys do, especially in California, because it's super expensive to buy a house, that is usually baked into your rent. So if you're paying your $4,000 a month to stay in your house, part of that rent is going to the property taxes of your house. So to summarize, income tax, sales tax, property taxes. If you're an everyday person without a business, you deal with these three type of taxes unless you're in a state that doesn't have one or the other. Very quickly, business taxes, same thing, throw those in there. And then on top of that, you pay incorporation taxes and you pay payroll taxes. You pay a few other taxes as well, but those are the two main bad boys if you own a business. But these are all the categories that the government uses to fund the government, again, on the city, state, and federal level. So, okay, that's taxes. That's the categories. Let's talk a little bit more about income taxes. So, just told you guys what it is. I'm sure you guys heard about tax brackets. So, what are tax brackets? Well, tax brackets is the bracket or the kind of category you're in when it comes to the amount of money you make, aka your income, and it's taxed based on the amount of money you make. And it's like a ladder. So if you don't make no money, you don't get taxed. You make just a little bit of money, then you get taxed at 10% federally. And then it goes, I believe, I may be wrong, and this may be dated, but I believe it goes 10%, 12%, 22%, 24%. I believe it goes 34% and then 37%, depending on the income. Don't ask me what the actual numbers are. I don't know it off the top of my head. But what I do know is federally, if you're making, I believe it's like over $500,000, then you're getting that 37%. Most of you guys listening don't make that. If you are, please let me know, because I want to know you, and you can teach me how to make money too. No, I'm just playing. But yes, it works like that percentage wise. If you want to find out the details of it, it's on the IRS. You can find it out. It's all in a graph. And yes, it does get updated once a year at the beginning of the year. Why? Two main things. One, inflation. If you guys don't know, average inflation is about 3%. Yes, I know you guys are still complaining about inflation, but right now it's at 3%, sidebar. But the average inflation is 3%. So it's always going to go up for that reason. And the second reason is if there's just any new tax laws that take effect January 1st, it's going to roll over into, obviously, those brackets. So the feds have that bracket system. And then if you live in a state like California that has income taxes, they also have brackets too. And those percentages vary, obviously, state to state, I believe, but they're smaller numbers. It's not like, 20, it's not like 10, 12, 24, just like the federal. But they do add on. So let's just say you're at the smallest tax bracket of 10%. And then let's just say in California, that tax bracket is 1% for California. Your total tax bracket would be 11%. That's just an example. And then you go, and again, it goes up like a ladder. One thing I want to clarify, and if you're going to take any one of the three things you need to take away from this episode, everybody, you got notepad, pen, take it out right now, break it down, write it down. A lot of people don't understand this, what I'm about to say. As you go up the tax ladder, yes, you are taxed at a higher percentage. However, it's not your total income. So let me give you guys an example. Let's just say you're at a tax bracket that is at 24%. And let's just say that number is between $40,000 and $50,000. So you make $55,000. So let's just say for this example, that moves you into the 34%. Your whole 55,000 is not taxed at the 34%. That's not how it works. How it works is that extra 5,000 that you made that moved you into to the new tax bracket, that is what is actually taxed at that percentage. So again, it works like a ladder. So your first, let's just say 10,000 is taxed at 10%. And then let's just say once you get to 20,000, it's taxed at, 22%, and so forth and so forth. It's not all one like lump sum. It's getting taxed at 34% for my example. I get a lot of questions about that, and most people seemingly don't understand that. So a lot of people over here are trying to find ways to get their income down to the bottom tax bracket, but literally it's just, okay, you got it down by 5,000, 4,000, 3,000. You are saving taxes overall, so I'm saying don't do it. But people over here having anxiety attacks or heart attacks because they're trying to find ways to go down. And I'm like, girl or guy, like whoever, it's not that big of a deal. You are saving money, but it's not like you're saving thousands of dollars by you deducting $2,000 and that drops your overall income down. So I really wanted to make that point. I get that question all the time, and I just wanted to make it clear for everybody. Now, speaking of tax deductions, what are those? What are tax deductions? What are write-offs? What are tax credits? There are differences. So a tax deduction and a tax write-off are one and the same, gentlemen and ladies. They're exactly the same thing. So I'm just going to say tax deduction because that's the official term. So a tax deduction is any qualifying expense that lowers your overall income. Therefore, and using the example I just talked about, if your income goes lower to a lower tax bracket, it will help you pay less taxes. And even if you don't have your income go to a lower tax bracket, you're still paying lower, right? So if you made $90,000 and you have $5,000 of tax deductions, you're only going to get taxed at $85,000 of taxes. So that's where the equation goes in. So that's how it works. That's how a tax deduction works, or a write-off. And then there are tax credits. Tax credits are dollar for dollar, basically like coupons that you just subtract from your taxable bill. So let's just say you made $100,000, you had $20,000 in tax deductions. Now it's $80,000, and I'm just making a number up. You owe $1,000 to the government. So you owe $1,000 to the government, but you went and bought yourself a Tesla, and they still have the hybrid electronic tax credit where you get $1,000 of tax credits for buying that brand new Tesla that you're not driving because you're using the auto feature on. Shame on you. That's for me, people who can't drive because I'm blind. So anyways, you owe $1,000 and you have $1,000 in tax credits. That tax credit is a subtract. It's basically $1,000, subtract $1,000, and now it's zero. You owe nothing. Again, that is not the same as deducting $1,000 because you would just be dropping your overall income. That's different. So the moral of what I'm saying, find ways to find deductions and especially tax credits. They are out here for everybody to use. Yes, there tends to be more for businesses than for individuals, but I just gave you guys an example. I'm not sure if California still does it, but historically they've done like a hybrid or electronic car tax credit if you buy those type of cars. So they're out there. Go look for them. I will for sure make a whole episode about how to lower your taxes because that's what everyone freaking asked me, and I'm not going to put it in this short episode. I'm going to put it in a longer episode. So that's tax deductions, tax credits was the difference. So what is there to talk about? I talk you guys everything. Now I'm just playing. So standard deductions, itemized deductions. How do those work? A standard deduction is pretty much what it sounds like. You get basically a deduction of your taxable income that's just given to you by the government. So whatever that number is, it changes every year. It could be $3,000, $4,000, $5,000, $6,000. They just give it to you because they're nice. Itemizing deductions is where you have, again, qualifying expenses that you can deduct from your overall income. The strategy is really simple. I can tell you guys, it's really simple. If you have expenses that itemize enough over the standard deduction, go that route. It's really simple. So, okay, Darrin, what are expenses I can itemize as an everyday person? Not much, which is why you need to open a business. No, I'm just playing. But unfortunately, it's true. There are some you guys can write off. You guys can write off. Obviously, the number one that everybody writes off is their children, dependents. Dependents as a whole. It doesn't have to be just kids. It can be elderly or anybody that you're caring for. You can write that off. You can sometimes write off medical expenses. You can write off property taxes. And there's a few other things that everyday people can write off. Charitable goods, some other stuff, but it's limited compared to when you own a business, when it is literally dang near everything. So again, just go ahead, see if you have enough expenses to write off, and if it's greater than the standard deduction, you go ahead and go the itemized route. If it's not, go ahead and go the standardized route. So, okay, what else is there to talk about? I know what there is to talk about. Who can file my taxes? Who's the best person to file taxes? Darrin, can you file my taxes? No, please stop asking me to do your taxes. You guys I say this jokingly, but it's for real, you guys. There are people who actually ask me to file taxes. I get it. I do know how it works. And can I file taxes for people? Yes, I can do it and all that stuff, but that's not one of my services. I'm not an authorized tax preparer, so I'm not trying to get in trouble with the government. So don't ask me. You can file them yourself, the old-fashioned way. Literally, pen and paper. I believe you can still do that. And I believe you do need to do that sometimes when you're late doing the previous year. So pen and paper, you can do it electronically directly. You can use a tax preparing software. The most common one I know you guys use is TurboTax or an H&R Block. You can go to a tax preparer company. Again, H&R Block is pretty big and common. You can go to a individual tax preparer who has their own business. It's actually pretty simple, by the way, you guys, to get your license to prepare other people's taxes. You can go to a CPA. That's what I do. I tend to use a CPA to file my taxes, mainly because I have a business and I have a personal. Or you can actually go to a tax lawyer. They're the most expensive, but they're the tax lawyer. They're definitely going to get you some money back. And the whole reason of, Darrin, okay, why should I file taxes with a CPA who's going to charge me literally $500 or $300 or $700 flat or whatever amount of money, or a tax lawyer who can be just as much, if not more? Why should I go them and not do it myself? Because you don't know the tax laws. I don't know the tax laws off the top of my head. That's why you go to these guys, especially if you have a lot of assets. This is mainly property or stocks. You want to go to them. Or if you own a business and you made a lot of money and you're not trying to pay the government directly, you want to go to a specialist like a CPA or a tax lawyer or anybody who specializes in help in doing taxes for those type of people. So that's taxes. That's it. I'm out of here. Quick episode. I just did it in 30 minutes. Yep, we're done. 26 minutes. What else is there to talk about? The next episode, that's what's there to talk about. In this one question that I know people are asking, Darrin, I know you said in a different episode, how can we lower our taxes? But can we just give you something? Just give you something, please? Let's get something. Can we get something? Okay. The easiest way to lower your taxes is to open up a business, in my opinion. Why? I'll talk about it more in depth in the business tax episode and how to lower your taxes. But simply put, going back to the definition of itemized deductions. When you own a business, you can deduct a lot. The definition of a business tax deduction is anything that is ordinary, necessary, or common in the business industry that you're in. So me being a consultant, what's normal? Okay, I need internet, I need a place to stay. I obviously have a podcast, so I need, editing software. I need to treat my producer nicely so she keeps editing my episodes and putting up with me being late. I need to deduct everything or a lot of things. So when you own a business, you just have more opportunities to write off what you're spending. That's why even though all jokes aside, I really push people, almost to say, if you're trying to save money, just open up a business, do what you like to do on the side as a hobby, and just try to make some money. And even if you don't make any money for the first couple of years, the government actually understands that and you can still write stuff off. So we can talk about that greatly in more detail, but that is the number one easiest way to lower your taxes. Open up a business. The other way is ask someone like me, DM me at Financial State of Minds on Instagram. Look at my website, financialstateofminds.com. You can ask me, we can have a one-on-one conversation, and I can kind of give you some ways on how to lower your taxes personally for your own situation. But that's it for today. I just flew through that episode, 30 minutes, in and out. I'm hungry. My girlfriend's over here sitting like, you better feed me before I whoop your behind. And that's it. So, bye. Oh, wait, I have to do the drop, rightfully? Yeah, I got to do the drop. Okay. Financial State of Minds. You've been listening to this episode, tax episode 37. Thank you, viewer, listener, for listening to me with my corny jokes. Appreciate you guys tuning in every episode, day in and day out, week in and week out with my erratic schedule. I really appreciate all your guys' support on Instagram, through the DMs, through just engagement, just letting me know that you do listen. I really appreciate that. You've been tuned into KGPC 96.9. You might be watching this on the broadcast Mondays at 9s. You may have missed it maybe at the PM, or you may be listening to on Spotify, iHeartRadio, or your favorite other platform of choice that hosts podcasts. Thank you guys. Like I said, I'm pretty sure next episode I'm either going to talk business taxes or we're just going to go straight into how to lower your taxes. That's it. I'm done. Nothing else. Bye. Peace, kings and queens. I'm out of here.